Baby, we're back with another podcast. What number is this? This is EP3.
Yeah,
EP3.
it is.
The weeks are just flying.
Yeah.
Like, we say this all the time, literally when we're having fun. How much fun do we have in here, though? Seriously.
Oh, it's so good.
Mate,
Yeah.
The stuff that goes around and the tasks that we do, like from the trivia.
Oh.
The trivia. What did we do last week? You had to bear your taste buds with some cat food. Some baby milk, which surprisingly...
Yeah, I didn't mind that, to be fair.
You didn't mind, did you?
Yeah,
you didn't mind?
yeah.
You got on all right?
What was that?
You got on all right with it?
Yeah, I mean, with the baby food, I had actually used the baby food.
I bet you went over and got some.
No. But literally, the baby food was helpful because when I had that chili,
Yeah.
I needed it. So
Yeah, it's true.
it helped
Mate,
a
the
lot.
smell of it put me off. But
Yeah, no.
how's your
It smelled great.
let people know? How's your 'cause not everyone knows what you do outside of work, but how's the MMA going, right?
Yeah,
Doing
it's
MMA,
going
right?
good. Yeah, so last couple of weeks I've been doing MMA. Been doing a bit of jiu-jitsu, been doing a bit of Muay Thai, been doing a bit of wrestling as well. And yeah, I'm really enjoying it, although I don't know what it is about wrestling, but every time I do wrestling, like the next day,
I can imagine.
I'm
Well,
gone,
yeah, it's
mate. Like my shoulders.
A lot of
Yeah.
potential to get torn muscles there, like
Yeah.
especially like your shoulders and your back.
Yeah.
Yeah, because obviously, as I said, I did Muay Thai for like around 2 years, and I
Yeah.
loved it. The thing is, you just get so fit. It's a great way to channel energy,
Yeah.
right? It's a great way to channel energy. I recommend it for anyone. And I did jiu-jitsu as a kid. I literally did it for about 5 years.
Oh, nice.
Yeah, I did it as a kid. I got up to brown belt. It was
Nice.
So I did really well at it, and I just ended up stopping. I used to do it at Abbey Sports Centre. You know Abbey Sports Centre. That's where I used to do it.
One?
Yeah.
Wow.
Yeah, I used to do it there. Yeah. So, all right, guys, look, what have we had this week, Joel? The highlights really, the bulk of the moves come. All right, aside, we'll get onto the coronavirus in a minute, but Bank of England.
Yeah.
Right.
Yeah,
what happened?
Yeah. Oh, Bank of England, it was so good. So basically, the Bank of England, they came across as less dovish than we thought they would, right? Because, we thought there was some chance that they were going to cut. They didn't, so that was a spike. Then the voter split as well was more hawkish than we thought. Most people thought it was going to be 6-3 in favour of holding, but it was actually 7-2 in favour of holding. And then, in the press conference, Carney, when he was speaking, he didn't really sound like he was keen on easing at all. He was trying to be like completely neutral. So, definitely caught a lot of us by surprise, to be honest.
Yeah, and to be fair, as I said, so obviously I made my prediction. Those who watched the podcast last week, I was getting so excited here because it's playing out well on the trade, and it just played out well. See what I was calling. So obviously I said that initial spike to the upside, and we saw it, and then we ran into that big barrier, didn't we, for GU at 131. It just wasn't breaking through. We were seeing rejections, and I was literally just pacing up and down, just like celebrating. I was like, yes, baby, we called that. Bang on. Obviously we called that initial move, and what typically, in any other day, I guess it's just because it's Carney's commentary was more so hawkish somewhat.
Yeah, or not dovish.
Not dovish. But we downgraded our GDP forecast, and we downgraded inflation forecast, right? So obviously, just to bring that in perspective for people, look, lower growth means potentially, exploring rate cuts, right? Exploring rate cuts. Lower inflation, again, exploring rate cuts, right? Remember, if inflation's low, we need to try and cut rates, try and bring up those inflationary levels. So those things are dovish. But I think and we could tell that in the tone of the press conference, where everyone just knows that the whole Brexit thing has weighed upon so many industries. They were expecting this. They're expecting those downward revisions. So that's why we didn't see such a move to the downside for GBP.
Yeah.
So it was just allowed to just run free after breaking through that 131. In terms of, for me, at the moment, obviously, dollar's been getting smashed, right? You've seen it at the latter part stages. Well, today, I actually posted that via the Freak Network we've been all over this since, it's Thursday night. Thursday night, we had this ascending wedge structure. This ascending wedge, and which we pierced. We actually pierced on the 4-hour last night, retested it this morning, and it just made way for some further downside. Literally, textbook. So why do you think there's a bit of dollar weakness in your view?
I mean, fundamentally speaking, obviously we had the Fed this week, which at the time markets thought was, it's a bit of a snooze, right? But we've been talking about repo operations for a long time as like quite a key thing for the dollar.
And what are repo operations? Bring it to perspective.
Repo operations, effectively, banks can lend money to each other over really short periods of time. But this market for short-term money, last September, it started almost going wrong. And so the interest rates that banks were charging each other started going up to ridiculous things like 10% or even more. And that's because there wasn't enough banks offering each other liquidity that they need. So the Fed had to step in and start offering this money to banks, basically.
Exactly. And the thing is as well, what that means for us, like for the consumer, is if they're having problems there amongst each other, then they're less likely to lend, right?
Exactly.
And then people are not going to be being able to borrow, and then people are not going to be able to spend and stimulate the economy and bring up inflationary levels, so on and so forth, and helps growth. So obviously, in a way, that move is a dovish move, right? It's more dollar negative.
Exactly, because just Chair Powell, because we didn't really say it properly, but he indicated that they will sort of take it as it comes with the repo market, as opposed to cutting things off in April.
Yeah, it's funny. I was, we were saying this week, like, well, I told you when I came in when was it? It was on Wednesday night at the FOMC, and then when I came in on Thursday, I was like, it's so boring. Like, and Jerome Powell, he's literally a boring mother beat. So boring. He's like, some GDP. He's just the most boring. Comparison to Carney, and I told you, this guy, he's so charismatic. Bit of banter. He throws some jokes out there, and it's great. And he's very charismatic. He's literally like a movie star. I think he's the most fun central bank that we've seen. Look at Polos. Look at Janet Yellen in the past. Look at Ben Bernanke. He was boring mofos. So yeah. Anyway, that was the FOMC. So I guess in a way that teed the markets up to see some dollar weakness. And which for me personally, I'm expecting this to carry through this week. Right, we're going to see some further outperformance for Euro, GBP. Again, be careful with GBP because we've seen these comments this week, remember? The relationship is very sour. We know that still at the moment with EU and UK, right?
Exactly. We've basically had... we've seen this commentary that we've been updating on all week, but both sides are kind of digging in, right? So, like the European side are essentially saying, if you want access to our market, there's going to have to be some alignment. Whereas the UK side have been saying, we want access to your market, we want free trade and all that kind of stuff, but we don't want alignment and all this kind of things because we want to be able to have our own rules and regulations, all this kind of thing. So, they're quite a long way apart and something's got to give at some point. To be honest, I personally think eventually, as we approach the end of the year, they're going to fudge it somehow. They're going to find some middle ground. But, as we get closer, as we know, it's going to hit business investment and it's probably going to scare pound traders as well.
It will.
They'll be like, oh my God, there's not enough progress. And
it's true.
Yeah, it's going to be a risk.
It's going to be very sticky initially. It's going to be very sticky. And the thing is, as I've said, the EU will want to make an example out of Britain so that no other nation thinks, you know what, we can leave and we can negotiate a great deal just like that.
Yes,
it can't be done. So, from a political side of things, they're going to have to keep a tough stance for now. For a tough stance. And what does that mean for the pound? Well, look, obviously we've seen that upside now because of the Bank of England. But for me, I still believe the rallies are vulnerable. Obviously, this is a different case because we're seeing a bit of a tremendous upside at the moment because of the dollar weakness as well. But, if you look at GBP, like with yen seeing flows with the coronavirus still, I'm still seeing some downside there. China. What's going on?
Coronavirus. It's spreading and... we're not liking it. We're all getting a bit worried. Like, even personally, I'm thinking, do I need to get a mask?
I know. I was looking into them. You know what? As I said, it's really disappointing for me because obviously I've got quite a decent base over in China. Got strong fund ties there, and I was supposed to be going over to China potentially for like a month, maybe up to a month, and now that's off the cards. Because there's no flights. There's no flights. No, in all jokes aside, it's pretty bad.
It's really sad. So, I mean, all these airlines cancelling flights, loads of China's neighbours, including like Russia and Japan, basically cutting off the border to China, not letting any Chinese people in because of there's so much fear. Just this morning, we had our first couple of confirmed cases here in the UK, which is a bit alarming.
I know.
I think Russia also had their first case. And the total cases also today it's more than 10,000 now. So
I know. And if you look in terms of the markets, NZD, AUD getting hammered, absolutely raped. Raped. Obliterated. What other words? Annihilated.
Destroyed.
Slammed. Literally slammed.
That's what we say in the thing.
Literally slammed. Yeah. No. Obviously, without sounding like a broken record, but as a reminder, remember NZD, AUD. they're exposed to China, right? China are their biggest two-way trading partner. So we're expecting that to continue. I was saying to the Freak Network guys, Joel, and I stand firmly on this. And I mean, I posted a video on it on IGTV earlier in the week. I said, any dips of weakness we see in JPY, gold, see those as opportunity. They will continue to be bought. The markets, look, this, as you wrote, right? You've been writing to the members all week that this is worse than SARS. And SARS was huge in 2002, 2003. This is worse. The markets haven't by far priced in the worst yet. This is still well within its infancy. This can get a whole lot worse. That's why I maintain that view of the safe haven flows. I think that's pretty much it for this week. So we've spoken about BOE, we've spoken about Fed, spoken about China. What's going on next week?
Well, I mean, obviously it's NFP week, so I mean, in a normal week that would dominate, wouldn't it? US data, NFP week. But to be honest, the dominant theme probably still going to be coronavirus. But aside from that, and aside from NFP, we've also got RBA.
What's going on with RBA at the moment?
Yeah, so RBA is an interesting one. It's a really interesting one. So kind of like BOE, right? So pricing earlier on in the month for a cut got quite high. It got to above 50%. But since about the middle of the month, we've had a couple of good data points from Australia, right? So jobs data was quite good. I think CPI was a little bit firmer than expected as well. And now pricing for an RBA cut has gone to maybe like 15-20%. Last time I checked anyway. So, yeah, it's a really interesting one. They could still cut, definitely. But if they don't, we're probably going to see that little spike in Aussie, which could be a really good opportunity to get short, to be fair. Like you were saying, fundamentally, we're negative Aussie at the moment, aren't we?
Exactly. And that's where I was going to get in from the trader perspective, right? For me, look, as you said, the expectations for a rate cut obviously dropped. Remember, two key data points, Joel. CPI popped to the upside, didn't it, most recently?
Yeah.
And then just a week or so before that, the unemployment rate dropped again.
Yeah.
And for those that don't know, unemployment rate is the RBA's literally their number one barometer. You know? Outside of inflation, jobs is first. Like, they actually want... and I was reading before, it's like from the RBA watcher, Terry McCrann. He said that their target is really around the 4.5% mark, 4.5.
Yeah.
So still way off. It's at 5.1%. So there's still potential that they could further cut rates down the line. You know, the door will be open.
Yeah.
So as you said, if they don't cut rates for me, what I'm looking for, like we saw with GBP with the BOE, spike to the upside. But then opportunities to sell that because of this coronavirus tone.
Yeah, because they can't be hawkish. They can't. Because the bushfires have been bad. That's a bearish thing for them. Obviously, coronavirus.
Do you think that would have taken anything off the economy? GDP?
I think it will have an impact. I think, obviously, there's a bit of a lag between when things happen and when you actually get the Australian data. So by the end of next month, we'll start seeing that impact. I don't think it will be anything compared to what coronavirus is doing in China, though. But yeah, definitely have a bit of an impact, to be honest. Probably more on sentiment, soft indicators.
Agreed.
Like surveys and stuff, if you know what I mean.
Agreed. I'm just flicking through the calendar now. Oh, Trump. So has Trump been cleared yet of his, because obviously he had this hearing, right? About his impeachment.
I think that's going on today as we
Still
speak.
I think it's going on now.
Yeah, Friday afternoon type thing.
Later on. What else do we have? To be honest, you're right.
Lagarde speaking, CAD jobs. CAD jobs will be quite
CAD
good.
jobs will be a big one.
Yeah.
But after the Bank of Canada changed their tone, right? More dovish.
Exactly.
But for me, I'm actually looking for some dollar CAD to the downside this week. You know, like how I described it as a Dixie wedge?
Yeah.
Same thing I see on a daily for dollar CAD, so we could see a breakout to the downside there. But I think that's pretty much everything, dude.
Yeah, I think so as well.
That was a good one.
Nice.
All right. Other than that, guys, that's it. Don't forget to check out freaknetwork.io. And also, guys, we recently launched a technical course. So that's been, we had a soft launch, which has gone out to around 10 people. We allowed just a couple more, and they're trialing that. And it's going to be full launch come March. So do check that out as well. Do check that out and declare your interest and get ready on the waiting list because that's going to go live. Other than that, let's get it.